Ladies and gentlemen, we have major news. In response to Jim Cramer calling out Elon Musk, telling him to join him on Mad Money to discuss his side of things, in specifically regards to the compensation package, Elon Musk has responded. He says, we could do an X Spaces. Now that would be something. And whether or not this happens, I don't know. I'll just tell you right now, if it does happen, the one big negative that could come out of it is if Elon Musk throws doubt about leaving Tesla in that conversation, right? That's the big negative. The positive is more attention to the Tesla shareholder meeting, more votes that will likely get cast, and maybe some alleviation of the fears that Elon would leave Tesla. I actually think that could be pretty important for the stock of Tesla if it indeed does happen. But really what I want to talk about here in this video is one, what happened to markets today. We talked about that a lot in the last video, so we're not going to highlight that too much in this video. But I think more importantly, what to expect coming tomorrow. We do have more big data. As well as that, we had some unusual call buyers today in Tesla stock, and I want to just make sure you guys understand what that means. Lots of other things to cover here in this video as well. Let's go ahead and get started. Hit the like button and subscribe to the channel if you have not done so already. Now, on top of the really bullish trades that we've seen today, were a lot of those same trades that we've been talking about, targeting specifically the June 21st expiration. You have a 240, 250, 255, 266, 276 put. All of these trades are over $1 million. This one's 3 million, that one's 11 million, that one's 2 million, 2 million, 19 million, 9 million, 5 million, 7 million. You know, you kind of understand, right? Here's another 12 million, almost 13 million, 9 million, 4.5 million, 3 million. I mean, the list goes on and on and on with these deep in the money puts that are being bought. And these by nature are not necessarily super bearish trades. They're just hedge funds and institutions that want to hedge out their position. I think if anyone tells you June 13th is not that important, one, they don't know what they're talking about, and they're lying to you. If they tell you that Tesla stock is not going to go up a lot or not going to go down a lot, they're lying to you. June 13th has the possibility to drop Tesla stock 10 to 20% that day. It has the possibility to rally Tesla stock 10 to 30%. I think 30% is a little extreme, but you could see kind of how that could happen if you understand the market dynamics of what's going on right now. Because all of these options that are being bought, these 12 million, 5 million, 20 plus $1 million positions that are just, you know, rolling onto the options chain in masses right now, they're causing market makers to go out and short a lot of shares of Tesla. And that's why even on a day like today, Tesla slightly underperformed the broader markets. And that's because all of that shorting pressure. Well, what's going to happen if the vote goes through on June 13th? You're going to see the market makers go out and buy all of those shares back as Tesla stock does go higher. And that's what could really drive a huge outsized move for Tesla. Now, it's actually very interesting about June 14th, and one of the reasons why I think there's potentially a big trade to be had around this shareholder vote is because if you go to the June 14th, 2024 option expiration and you add the call premium and the put premium right at the money, that is $1,123. If you divide that by 176, right? But you're doing this in options terms. So $5.38 on the put side, $5.85 on the call side. What do you get? Well, you actually get an expected move of Tesla stock only about 6.3%. That's not that much. And I think almost guaranteed between now and, you know, June 14th, you're going to get a larger move than that. Now, if we do this same calculation for the 21st, that's where a lot of the options are really calculated. I can just tell you right now, it's going to be a slightly larger expected move, but really not that much, right? For the option expiration of June 21st, you're only expecting about a 7.8% move in Tesla stock by that Friday. So, I mean, yeah, it's not that expensive to hedge relative to historical standards. And I mean, I'm expecting a much larger move than 7.8%. And that's one reason I do plan on trading this event for Tesla. If you guys would like to come get access to all of those trades, every time I make a trade, I send out alerts. And I did make a trade on Tesla today. Check out that link down below in the description of this video. But beyond that, you did see some very bullish option activity as well. Here is a June 21st 210 call worth about $1 million. Here's a 250 call for August 16th. And we went over these in the last video, but anywhere from the $200 to the $300 calls are being bought as well, big time, by these big money investors. And these are not retail investors that are making these trades. These are big money investors. This is the interesting options flow, and it's really only looking at, really, really large orders. So today was good. You definitely started to see some bullish, speculation in Tesla, but it's still being dominated by put protection. Now, I do think tomorrow could be a big day as well. We are going to get JOLTS job openings. We're expecting about 8.4 million. Last month, we had 8.48 million. So you're only expecting a loss of job openings about 80,000 or so in the last month. Now, clearly less job openings means maybe the economy's not doing as well. Maybe the labor market's weakening a little bit. But that's what the markets want to see. Now, if you drop 1 million job openings, that's probably not a good thing. If you drop 2 million, that's definitely not a good thing. If you drop like 300,000 job openings, that's probably good. And the best way to think about this is if you are a business owner and business is booming and you want to hire, 10 employees because business is booming, great. I mean, odds are if you want to hire 10 employees, business is booming for any company, if for that measure. Well, if business slows down and maybe you're only looking to hire 2 or 3 employees, you're going to have less job openings, and presumably your business is not booming. If anything, it's doing okay. You are also going to get factory orders month over month, expecting that number is going to come in about 0.7%. Last month was 1.6%. Fine, I don't think that really, matters too much. And that's pretty much it for tomorrow. You are going to get total vehicle sales for the month of May, expecting about 15.8 million. That's also usually not a catalyst at all. You will get JOLTS job quits, and a couple other smaller data points related to the JOLTS job openings, but that headline number is really going to be what's important. Now, I do also want to highlight this. We had good news today, regardless of what the markets did. I think there was a couple things kind of working against the markets. There's a lot of fear right now about what's going on with the New York Stock Exchange, since they can't have a functional market for more than 2 days following this T+1 settlement time change. Going from T+2 down to T+1. You've had a lot of stocks just outright halt, that don't open, that are not, trading correctly. And that did cause quite a bit of fear in the morning today. You also did have an upwards revision to your inflation numbers. And this did come from Nick Timmerhouse today. So I'll just go ahead and just pull that up. Nick Timmerhouse, that kind of pointed it out well. It says the New York Fed's measure of inflation persistence, the multivariate core trend rate, saw a big upward revision in Q1. This series has been prone to some large revisions. January is now 3.3%. February is 3.1% versus 2.7% previously. And March is 2.9% versus 2.6%. So definitely got quite an upwards revision there for the last 3 months. And April was 2.8%. So we'll see what happens when that ultimately does get revised. But it does still look like it's falling, but not nearly as much as we expected. Big deal? I don't think so. But the markets may have taken it as some bad news today. But overall, it was a pretty good day. You obviously had Nvidia that was up 4%, and that just drains the market of liquidity anytime Nvidia is up that much. And I don't mean it was a good day because stocks did well or anything like that. They clearly didn't. Tesla is down 1%. It wasn't a great day. But with the data itself, it was really good. because you had ISM manufacturing prices paid that came in well below estimates at 57. The estimate was 61.3. The headline number for ISM manufacturing came in below estimates. Basically, everything was good besides your employment numbers. They came in a little bit hot. And, this is not just me speculating and saying this. I mean, look at 10-year treasury yields. They sold off 12 basis points today. Half of a rate cut today alone based on this data. I mean, you don't have to listen to me. Screw what I say. The bond market told you this was good news today. And I think that's the only thing that really matters in the grand scope of things. Now, if you guys have not followed the X account, go ahead and give it a follow over there. It is Michael Tyler. Pretty simple and easy to find. I share a lot of things that are encouraging and overall hopefully helpful and help you guys to make better decisions. Now, this is a post I really want to share with you guys. It says a standout dovish hedge seen over Monday's session has been a large buyer of September call flies, targeting a Fed rate cut to be priced by the September policy meeting. Fed swaps are currently pricing in around 15 basis points of cuts, or around 60% odds of a 25 basis point move for the September 18th decision. So someone with a lot of money just went out and, they placed a pretty bullish bet expecting the first cut September 18th. Now, I personally think the Fed's going to cut rates July 31st. Currently, there is only 15.5% odds of that and 84.3% odds of a continued pause. I do think the next 2 months, or the next two CPI reports, PCE reports, the next two jobs reports, next two of basically everything, will continue to show the economy is slowing down and inflation is also slowing down, thus really give the Fed a reason to start cutting rates by July 31st. Also had oil that sold off 4%, which is really good for bringing down inflation, continuing on this disinflation path. It's kind of unclear what caused that. It looks like the U.S. government went out and bought 3 million barrels of oil today. You would think that would actually give oil some upside pressures here, but a 4% drop, is good news for stocks, but it definitely makes you wonder what's going on there. Now, I know there's some drama with the Middle East and Israel and all that. Clearly, that's not gone away, but a 4% drop is quite notable. And usually when there's drama over in that area of the world, oil goes up in price, not down. So I think that is definitely something to keep our eyes on as well. Bespoke on X says this: still showing subdued month-over-month estimates for headline CPI in May and June on the Cleveland Fed CPI Nowcast tool, currently looking for 0.08% month-over-month CPI in May and 0.11% in June. That would be music to the Fed's ears. And again, if we get those kind of numbers over the next 2 months, I see no reason why the Fed would not be cutting rates by July. And this was just updated today. Brian Dietrich on X shares this post that I think is pretty interesting as well. Anytime that you've seen a 4% gain in May, what you tend to see is an over 10% return throughout the rest of the year. And that happens about 70% of the time on average. If you're looking at odds, 70%, those are pretty good odds. Now, for the month of June, you're on average higher by 1% in the S&P 500, and you're higher overall 80% of the time. So data's pretty strong to say June should be a good month for markets. And kind of to what I was saying earlier, Tesla Bull on X says the Warren Buffett is back. And these are those, really large trades that come through that are multi-million-dollar trades, and they are to the put side and to the call side. Around the 180 strike expiring June 7th, he's seen about $7.5 million in premiums that were bought. And around the August 16th, 2024, 220 calls, you had about $5 million in premium that were bought. On the put side, again, I've pointed this out many times in many different videos. You have that June 21st, 2024, 276 put. It's 276.67 put that these funds are buying as well. And I think most of this is just hedging. Again, but you have 12 million in premium here, 6 million in premium here, and then another almost 6 million in premium there. We do have some earnings coming out tomorrow that could be important, especially with CrowdStrike tomorrow after hours. You also have Hewlett Packard. That business is kind of related to like a HP or a Dell in regards to data center and data service. So markets are going to be watching that one as well to see if that industry is overall doing well. PVH, Stitch Fix, Guideware, Sportsman's Warehouse, Variant, and Lakeland Industries will report earnings. And then you do have earnings throughout the week as well. Wednesday pre-market, Dollar Tree, Ollie's, Campbell's, and a couple others. Wednesday and after hours, you have Lululemon, ChargePoint, Victoria's Secret, Five Below, and Couchbase, as well as Smartsheet. Thursday pre-market, Neo, Cena, Big Lots, Toro, JM Smucker, ABM, ADEX, and Orion. And then Thursday after hours, you have DocuSign, Samsara, Rent the Runway, Braze, Vail Resorts, Zoomies, and a couple of others. Overall, as I have said many times before, at least in the last couple of days, I'm really not expecting much of a rally. I'm really not expecting much of a fall for Tesla stock for, really from now until June 13th. I think the much larger move comes after that. And I think the way the options are pricing, you could definitely even, do what you guys want to do, but there could potentially be a trade there as well in the options market, either to hedge out a larger long position or potentially even make some kind of speculative trade. I think only pricing in 7.8% by June 21st is not that much. And I think Tesla could firmly be in the 200s by then, right? Or, potentially in the 120s or so by then. And if the, shareholder vote does not go through and Elon potentially says he would leave Tesla. And just for a little bit of comparison, 7.8% from here is roughly $190 per share. So I think Tesla stock could be, quite a bit higher than that. And again, that is really my expectation, right? I'm expecting that the vote will go through, that Elon will be compensated, and we'll get back to business as usual. We'll start looking ahead for the next comp package and the next event and the next catalyst, which will be early July. You'll get the delivery numbers, and then mid-July, you'll get Tesla earnings. And then hopefully July 31st, you'll get the first cut from the Fed, have CPI and all kinds of data spread throughout now and then as well. Keep that in mind. And then the robotaxi event on August 8th. I mean, as long as the vote goes through, I think that's the biggest catalyst. And if it does, I mean, I'm expecting Tesla stock could be in the high 200s, mid 200s at least by really the end of summer. Call it September, October, November, the end of this year. You could be pushing easily $300 per share. And some people say that's a little conservative. And, I think that could be true, especially if inflation does continue to fall and the Fed is able to cut rates. Because, again, I don't think this gets enough attention, but when inflation is high, it not only causes the Fed to raise rates and keep them there, right, like they have been, but it also lowers longer-term earnings values. So if you're at 2% inflation and you're expecting a company like Tesla will do, let's just throw out, crazy numbers here, $500 billion of total revenue in 10 years from now, and 10 billion, whatever the number is, of total profits, say 50 billion, because Tesla's doing like 10 billion these days, then, right, you have to discount that by 20% just to account for inflation. If inflation is 5% a year, you have to discount that by 50%. That's not good. So as inflation even falls, and then the Fed lowers rates, that's like two positive things that come together good for a stock. So let me know what you think about all of this information down below in the comments section. Hit the like button as well as subscribe to the channel. You guys have a great rest of your day, and I will see you in the next one.